Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Gold dropped $40 through $1,300 on Tuesday, and it's having another bad day today as it breaks through technical support levels. Now, obviously, this is bad news for optionality projects, which the market had chased this year in anticipation of higher gold prices. Has gold's decline affected any of our Discovery Watch juniors?
Jim, unfortunately, yes, because much of this rally that started at the end of January has been tied to the strength in gold, which has risen to a high of about $1,350 from the $1,100 level at the start of the year. And in mid-August, Chinese and Indian demand for gold stalled, and when the price rise stalled, then the ETF interest by the buying of ETF gold, it also stalled. Gold has been hanging around in that sort of $1,330 to $1,350 level. The junior sector has also been in a lull since mid-August, but this week gold broke down, and now the junior sector is breaking down. Investors who had participated in private placements earlier in this year, private placements that are now free trading or coming free trading soon, all of a sudden they are in a panic. They're thinking that maybe this rally is not the beginning of a 2 to 3 year bull market for the resource sector. Maybe this is a flash in the pan. We better get out of here. Everybody else is standing back and watching, saying, well, this could just be a temporary correction in the gold price. There's lots of reasons to believe gold is going higher in the long run, but we're not coming in. So this is hitting juniors, whether they're optionality plays or companies in the midst of exploration programs looking for new discoveries.
Sirius Resources has suffered badly this week, and I see they put out news. Was it just bad timing, or was the news bad?
It was certainly terrible timing to put out the first 4 holes from a 10,000-meter drill program, of which 28 holes were completed, a program that began in July after some logistical delays. In August, we had the stock run as high as $1.40 on rumors of pretty good-looking visible gold. The company put out a press release saying, yes, in the southeastern corner of the Chichu project, where we drilled hole 52, the best hole ever on the project last year, we have stripped the overburden away, and yes, we have seen gold and visible gold in certain locations. The news release we got this week was for 4 holes that aren't in that area. The holes were so-so. The market saw that the stock price was going down, which was partly related to gold plunging $40. And whatever the market does, the stock price does, investors conclude, well, that's what the meaning of the news is. So they have been selling the stock all week. It's down to about 50 cents right now. But in fact, if you look closely at the news release, you'll realize that the most interesting batch of holes, 3 or 4 of them in the vicinity of hole 52 where the stripping has been done, they are due in the next 3 weeks. And another batch of 3 holes from the Wildcat area, which is a brand new area about 1,500 meters to the northwest of the main area, those are also going to be received in the next few weeks, and those were drilled from a different angle, which may give us a completely different insight on the project. So for people who missed this play, this is an opportunity to position back in. Drilling has been paused for about 3 or 4 weeks. They will resume in November. They need the assays to get caught up because they've only about 2/3 through their drilling program, but the next batch of holes need to be spotted based on what the earlier holes are telling them. And one of the things I picked up talking to management is that the stripping of the area in the hole 52 area has revealed insights as to the structural controls. They have a better understanding now. They're eager to see the results of the holes they drilled before this knowledge and then go back in and drill some holes that hopefully deliver some zinger results by the end of the year.
We'll have more on Discovery Watch with John Kaiser right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. Another one of our Discovery Watch juniors, Azamat Exploration, which has a stake in the Eleanor South property adjoining the Chichu property of Sirius, sagged only modestly. Why was Azamat spared a sell-off?
Azamat and its partners, Corp and East Main, have just started a 5,000-meter drill program on the Eleanor South project after collecting samples earlier in the summer to give them a better understanding of where they should be drilling. Now, Sirius has drilled 60, 70 holes on the property already. What Azamat is tackling is, in essence, the mirror image, the southern half of what Sirius has to the north. So as far as the market's concerned, the glass is half full. They managed to find an outcrop called the Moni Prospect just south of the border, which has some very good gold at surface. They've completed an electromagnetic survey, which has revealed what they believe 2 corridors of magnetite destruction indicative of hydrothermally driven fluids destroying the magnetite, one that runs through the middle of the intrusion and one that corresponds to the flank of the margin between the intrusion and the country rock. Their drill program will tackle both these corridors. It's just underway now. And Azamat has considerably less stock out than Sirius, but it does have a lower 26% interest. It's a fairly tightly held stock. It's also a prospect generator, which has multiple other projects. No work being done on them right now because the market is still pretty soft for exploration in remote areas. But this is one where your downside is limited because the market's not putting too much expectation into upside joy for the Eleanor South project. And if it does disappoint, there's all these other projects supporting the company. However, if we do start getting joy, then Azamat's the one that will run higher, even though that its valuation right now on an implied project basis is comparable to that of Sirius with its Chichu project.
CanAlaska Uranium is also down sharply. Is this news or market related?
Well, unfortunately for CanAlaska Uranium, it is entirely news related. Last week they put out news that De Beers had drilled 7 of the 11 targets scheduled for the summer drilling program, had decided to quit because of wet weather conditions. But more disappointingly, none of those 7 targets intersected kimberlite. So the market has gone completely glass empty on the Athabasca kimberlite project, where they have about 85 targets. The bulk of them are larger targets covered by lakes or swamps. De Beers is expected to go back in there in January when the ground is frozen and drill these bigger, better targets. But the market is wondering, okay, De Beers was pretty eager going in there, drilling these geophysical anomalies, did not yet have back any results from the till samples it collected near these targets that were shipped off to South Africa. So there's no kimberlite indicator mineral support for these targets. It drills 7 duds after charging in there. Now the market is concerned that maybe De Beers may not even carry on with this option in January. So that has really done a number on poor CanAlaska. And then this week they gave us the additional information that the drilling Cameco was doing on the West MacArthur uranium prospect in the eastern part of the Athabasca Basin also came up with very disappointing results. A lot of geological gobbledygook, but no obvious evidence of uranium mineralization, even anomalous levels in the target area, which is a projection of the C10 conductor, where Cameco on its own ground has already outlined 400,000 tons of 8% uranium. Now, Cameco will need to drill more holes to keep its 60% option alive, but Cameco itself is now going to court with the Revenue Canada regarding $2 billion in taxes that the government alleges should have been paid if not for this transfer pricing. So if this court case goes against Cameco, it will probably not be in a mood to spend money on exploration drilling. So both of these things hit CanAlaska. I think the diamond play is too soon to write off. It'll definitely get a bounce if we get word back from South Africa that there is kimberlite indicator mineral support for these other targets, which incidentally are bigger than the ones they did test and therefore more prospective for potentially economic diamond pipe.
Uranium prices have dropped to a new recent low of $23.75. How has this affected Eurovan and its Outer Ring project?
Well, the weakness in the uranium market, which has been drifting lower in the past few weeks, coupled with the general lull in the junior sector since mid-August, torpedoed the $2.5 million private placement financing the company was trying to do at 30 cents to support a 3-hole drill program on the Outer Ring project. Hurting the situation is the star of this year, NextGen Energy, which made a substantial high-grade uranium discovery on its Arrow project in the southern part of the Athabasca Basin in the Patterson Lake corridor. This company achieved a $700 million market valuation. There were high hopes that somebody would come and buy them out and take care of the next couple $100 million needed to delineate the system and come up with an economic study, and then plod through the 10 years it takes to permit a mine in the Athabasca Basin. However, with Cameco sidelined, Denison in no position to do anything, and Canada still having a rule against foreigners having a majority interest in the Canadian uranium mine, there have not been any takers for this. NextGen was able to raise $60 million from Li Kai-sheng, the Hong Kong real estate developer and billionaire, but it is in the form of a convertible debenture, so he's covered. He can endure whatever misery the market inflicts. So we've seen NextGen drop from a high of $250 earlier this summer down to $1.60, $70 level right now, as again investors worry that, okay, we're in for a lull, uranium's making new lows, there are no mines that are viable at $23.75 a pound. So again, they're heading for the exit. That has put a pall on all exploration discovery plays. However, Eurovan has gone ahead and taken the $350,000 they raised, and they are drilling a single hole on their ORX target within the Outer Ring project. They don't expect to hit high-grade uranium with this hole, but they are hopeful that they will intersect something better than what CanAlaska intersected at West MacArthur, namely alteration with evidence of anomalous uranium, telling them that yes, the geochemistry that we're seeing on surface is correlated with the uranium system. That will give them the basis to go back early next year, drill a couple more holes to vector in on a target, and set up the kill shot for next summer for what hopefully will be a major new discovery.
Do you have any new Discovery Watch juniors?
Yes, one very obscure company, trades around 5 cents, is called Endurance Minerals. Robert Boyd is the CEO of this company, and it has a project called Elephant Mountain in Alaska, west of the Fort Knox gold mine operated by Kinross. Now, this is in an area called the Tintina Gold Belt. It stretches from western Alaska all the way through the Yukon, and it hosts these intrusion-related gold systems. And Elephant Mountain is an area that is drained by a number of creeks, which since 1898 have been mined for placer gold. And the goal for Endurance is to find the source of this gold in the creeks. Placer Dome had the project in the 90s and did some work, but did not find anything substantial. These intrusion-related gold systems consist of these sheeted veins within the intrusive rock, and the trick is whether there's enough of them that it becomes a bulk tonnage gold project such as Dublin Gulch, or if they are high-grade enough that they become a high-grade system such as the Pogo deposit that Teck discovered. Now, there's a substantial gold, arsenic, antimony anomaly on surface. The company, with not much money in the treasury, has gone in there and bravely drilled 3 holes for a total of 600 meters. Those holes are now in for assay. They've given some nice geological description about hitting the right sort of rocks and structures and so on that should carry results. In the next 3 to 4 weeks, we should get the news telling us whether or not they've found a higher grade portion of this Elephant Mountain system that can become the focus for a much bigger program next year.
Are there other types of gold systems in Alaska worth watching for discovery potential?
Well, Registrar Gold Corp has assembled since 2011 a major property package in the Aleutian Islands, which they call the Unga Project. And it has 2 10-kilometer trends, one the Apollo Sitka and the other the Shumagin, where high-grade epithermal gold mineralization has been intersected by past drilling. And about 100 years ago, 150,000 ounces of 10 grams per ton were hauled out by miners. The problem they've had with this project is they have not been able to put together a substantial continuous resource. But the very large footprint of this mineralized system, and it's on one of the Aleutian Islands, so it's at tidewater. You can work there a much longer part of the year than you can in central Alaska, where Endurance has this Elephant Mountain project. The company spent the summer mapping, prospecting, putting together targets. It has now initiated a 1,500-meter drill program in one target area, Orange Mountain, where it hopes to intersect at depth the kind of intersections, intervals of high grade that get the market very excited. It's a critical time for this company because there's nearly 300 million shares fully diluted. There's 86 million warrants between 10 and 12 cents that come due in the next couple of months. The stock is slightly above that. Most of these warrants are held by big fund managers, Jacques Valencourt, Eric Sprott, George Ireland, and it's a bit of a nail biter here because they won't have results before those before those warrants expire. And with the market selling off like that, it's going to take a bit of true grit for these investors to exercise their warrants and beef up their positions. But this project, which has never really had a systematic modern exploration program, has the potential to deliver a major high-grade gold system in Alaska.
John, thanks for the update.
Thank you, Jim.
We've been speaking with John Kaiser of Kaiser Research. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.